Here's a conversation I had with Kirian von Hest. He goes by the name Deso. You can follow him on Twitter at Deso Games. He's been right a lot this year, so we really wanted to talk to him. Before we get started, I want to mention that this is not investing advice. Please do not consider it investing advice. There's a lot of useful information in it. Before you act on any of it, make sure you speak to a certified financial planner. We recorded it on October 17th, and here's my conversation. So welcome to the Early Stage Investor, and if you wouldn't mind, please enlighten our audience about some of those bold calls and how they turned out.
Thanks for having me. So after 2008 and the crash that everybody saw in September, I just got fascinated with economies and the question of why did nobody see this coming? So I basically spent the next 12 years just reading everything online about the US economy and economics in general and just trying to figure out what happened. And more importantly, I wanted to know if I could predict the next crash because, well, everybody knew basically that after 2008, nothing got fixed. So it was inevitable that another crash would come, but when would it come and how could one see it? Well, at the beginning of this year, in January, when I read about the coronavirus, that basically was an obvious trigger to me. So on the 25th of January, I told my Discord friends, basically everybody who was still listening to me after I burned some bridges warning people about the virus. So I told them that the market was going to top out on the 25th, 24th. And well, it rallied afterwards, but on February 7th, I posted a Twitter message again that this was a double top. I wasn't wrong. People needed to get the hell out because it was getting ever more panicked about the evolving virus situation. And well, the market crashed. So I still followed the whole situation all the way to March, where I called the US dollar top / gold bottom, where I said, well, if anybody's still holding dollars now, you should get into gold because this is as low as it's going to go and it's not going to get any better. So that's also what happened. And I've just been sharing whatever calls and information I could ever since on Twitter. And that's where you found me.
So our only focus at the Early Stage Investor is multiplying our money many times over by finding the next great long-term investment and getting in early. So what our audience is dying to hear from you is what you think the next great investment opportunity is and why.
Well, I do have a small list for that. First off, there is always a bull market in the waiting. It's just picking the right asset class. Right now, silver and gold are the obvious ones because, currency debasement, as well as shenanigans on the COMEX, as per one of my articles. Well, as per the shadow contracts thread on my Twitter that's pinned. But it's not the only one. As you said on your website, you're looking for 500x investments, right?
Yep. Well, like Netflix and Amazon and Apple, right? If they could do it, we can do it.
Yeah, if you can buy them at IPO, you can get that 500x, but you really need to buy at the bottom. I think that bottom for silver and gold has gone. I still think silver's going to go up many times, especially because of debasement, but also because there's a chronic supply of silver in the world. It hasn't been mined a lot. Big discoveries haven't been made or mines developed in the past, decade, basically, ever since the 2011 peak. Meanwhile, the solar industry has grown rapidly, and the main industrial use for silver is in solar panels. So the silver supply has been shrinking over the entire world to the point where if there's now suddenly a massive monetary demand for silver, it's going to go through the roof. And the price is in flux, but if it's $25 now, it could easily go 100x to 2,500 in like 2 to 3 years, depending on hyperinflation and such. That'll also mean that we're in such an environment that all the other commodities will cost more. So it's not actually going to go up like 100x. It'll be in real terms more like 10x. Look, I have silver, so 10x is good enough for me. But if we can get rich, of course, then there are other also investments. I have, in fact, 7 junior miners or mining stock. 2 of them are producers in gold, or junior producers in gold, former Orin Resources and Karora Resources. And I have 1 silver miner junior called Klondike Silver. By the way, none of this is investment advice. I'm just telling everybody what I've done or what I've bought. But those 3, like I said, silver's going to go up, gold's going to go up. So, of course, I'm going to have some of those companies. Never abandon the sure thing for a speculative bet, because value investing is really about earning it in the long run. You can get lucky once, but if you don't know how to hold on to that money, you're still screwed. So 3 other juniors that I have, so that's basically my main investment at this point, are rare earth juniors, located specifically outside of China. Because what I expect to happen geopolitically is that the US and China will continue to decouple from each other, regardless of who wins the presidency. Now, obviously, if Trump wins, it's going to go a lot faster. If Biden wins, it's going to go somewhat slower, but it's going to happen anyway. Also note that I am apolitical. I don't give a shit either way. But something that China has done in the past is use export caps on rare earth elements in a trade dispute with Japan and with the US. Now, the US appealed that to the World Trade Organization. They got it right, so the caps were dropped. But it's just to say that China has used it before, so they are liable to use it again. And it's a lot more palatable to use that as a policy manner to punish the US rather than do something like put tariffs on the 87% of antibiotics that the US gets from China. 87% of your supply or something like that. If they put tariffs on that, or if they increase that price, that's going to affect everybody right away, and that's going to put them against China. But if China puts back rare earth metal caps on those exports, well, there's just a couple of things that's going to go up in price, and there's going to be a lot more money going to China. But that's all of that's going to do. It's going to anger the US, and there's going to be repercussions, but it is just politically a palatable move, as I said. So if China does that, logically, all the rare earth miners outside of China are going to go up in value massively. Now, China mines also something like 85% of rare earths on the planet. It's a ridiculous number. They basically have a state-sponsored monopoly in it, exactly for moments such as this. Besides, rare earth metals also have a lot of military applications. All the companies, all the rare earth miners that I own, by the way, have government contracts now. But I think it was Linus Corporation, which was the largest. They've got a government contract with the US military for a rare earth development plant in Texas. So that's already starting. And, well, that's one aspect, of course. That's the rare earth caps by China, which, why they haven't done it yet, it's because Trump is very anti-China. Biden isn't that much anti-China. And anything China does against the US now, Trump will just use in the elections to say, see, they are bad guys, and that'll lift his votes. Why would you help your enemy? So that's why they're biding their time. I don't expect China to make any moves in 2020. But I sure should expect them to make moves in 2021. But then you're going to get the currency devaluation on top of rare earth export caps, because that's still going to happen. The reasons why gold and silver are going to go up is the same reasons why all commodities are going to go up. Now, copper is, they call it Dr. Copper because it's mainly used in housing. So whenever there's a economic situation, housing goes down and copper goes down with it. And you can see that here in the long-term chart. In 2008, copper was $4 a contract. Then in the housing crisis, it dropped to $1.40. And then in 2011, it went right back up to 4.5, higher than during the housing boom. And that's because even though we think of silver and gold as pure monetary, the reason they're monetary is because you can't print them, because you have to mine them out of the ground, and gold and silver are reasonably rare. Copper, it may not be that rare, but it's still a commodity you have to dig out of the ground. So if somebody bought copper futures at the bottom in 2009 and they sold them at the top in 2011, they still made 3 times their money. And the same thing is just going to happen to rare earths. But this is the price increases from the basis of January 2008. And you can see that dysprosium between 2011 and 2012 went up to 2,000% price increases, and neodymium went up about 750% in costs, because they're rare earth metals. Well, they're pretty abundant, but they're not mined in many places. And they're called rare earth elements not because of their abundancy, but because you cannot replace them in industrial processes. Neodymium, for instance, is the strongest magnetic metal that we found by far, so we cannot replace him with iron, for instance, because it's just not as magnetic. And that's why they're called rare earth metals. So as you can see, devaluing the currency, which is what happened in 2011, everybody was scared that QE was going to cause massive inflation, and that's why the prices of commodities went up. Well, that's going to happen to rare earths again, just as is going to happen to copper, silver, gold, platinum, iron, anything that comes out of the ground. So that's two things. That's better than gold and silver, because gold only has the monetary aspect. Silver has the monetary and the fact that it's not been mined a lot, so there's a supply shortage in real terms. That has also going for it. Once these export caps come online, naturally, the three juniors I have are all located outside of China. There's effectively going to be a supply shortage outside of China. So every rare earth producer outside of China is going to have that supply shortage that silver has, plus that monetary metals. Plus, here's the thing, a lot of rare earth metals get used in military applications. Now, it's no secret that China and the US have also military sort of clashing, not shooting at each other, but China's been violating Taiwan's airspace a lot. And in response, America has been aggressively posturing towards China more. If there's a war between America and China, it'll probably be over Taiwan, because China can't invade America because of geographic location. And at the same time, America can't invade China because there's 1.5 billion Chinese. They're just going to overrun whatever beachhead you create. They're just going to throw bodies at the problem, and they're going to have more bodies than you have bullets.
That makes a lot of sense. And just these conflicts between China and the USA are definitely heating up. And one thing I found really interesting is how, like, three countries that have done what China is doing right now, which is threatening to buy oil in anything other than the US dollar, are Libya, Iraq, and Iran. And we saw what happened to them. So do you see any de-dollarization kind of motive
of course
from China, and is that playing into this whole conflict that you're talking about?
It's playing out right now. China's already announced that they are selling their treasuries. They're going from $1 trillion down to 800 billion. So they're effectively selling 200 billion worth of treasuries, which means they are converting them back to dollars. And partially they're doing that because there's a dollar shortage in China, just like any other emerging country. China's not really an emerging country anymore, but it kind of is currency-wise. So that's one part. But the other part is they have been buying massive amount of commodities. The copper imports of China in June, July went off the charts. They basically tripled what they normally buy, even though their economy has taken a hit. I don't think it hasn't. I mean, we're not going to get any real data out of China. Let's be real here. But I do know reliably from a friend in Hong Kong that the housing prices there have gone slightly down. As you would expect in any kind of situation where you lock down 800 million people, that is going to have effects. So naturally, you would think that the copper inventories would just stay down or not exceed their normal levels, but they have gone through the roof. I also heard Andrew Maguire say that China has started buying silver as well as a strategic resource, because they realize the game that they played with the rare earths, they also played the same game with solar. So basically all solar production is in China, and all the other solar companies in the US and Europe have gone bankrupt because of state sponsorship. Well, the entire solar industry runs on silver, because if you don't have silver to put in those solar panels, you're not going to get any power out of them. So that's why they've also started buying silver. And I don't think they are aware of how little there is in the world, but they will run into that wall pretty soon. But again, that is also under doomsday demand, which is why silver and gold are going to become rare. But yeah, you can definitely say that's already playing into the conflict. I genuinely believe that there's no going back now. America and China are in a Cold War 2.0, and they will fight proxy battles. We are just not entirely sure when and where yet.
Yeah, it seems like the Chinese smelled blood in the water for probably the first time in our history, and they are positioning perfectly for a big currency war. So yeah, so you brought to light some great tailwinds. Silver and gold. Obviously, we have the industrial use growth and the monetary demand growth. But
Mm-hmm.
then we've also heard you talk about another very interesting bull case for it, which is COMEX supply drying up. So could you talk a
Yes.
little bit about that?
Well, I'll just tell the whole COMEX story then. So, for those of you who don't know, the COMEX is basically the futures exchange for gold and silver, as well as a whole bunch of other stuff. But it's basically grew out of gold and silver. So the prices you see of gold and silver on the internet aren't actually the prices of gold and silver. They are determined in the futures market, which is the COMEX. Now, historically speaking, over the past decade and much more, COMEX didn't physically deliver. You could take physically deliver, but there were always very few deliveries. There was a spike, for instance, in 2008 when, again, because of doomsday demand, but it quickly went down again when the banks were saved. So just to give an example of how it used to be, February was the last quote unquote normal delivery month of this year. And last few days, no contracts were delivered until the very last day when whatever's still left in open interest needs to be delivered. And that was 267 contracts, if I remember correctly. So little, almost nothing. Then, in the rest of the year, after the pandemic and the panic that followed, there have been massive deliveries on COMEX month after month. 1 month it's gold, next month it's silver. So in May gold, there were, I think, 53,000 contracts delivered, and each contract is 100 ounces. So that's 5.3 million ounces of gold delivered in May. Now, if it was just a panic month, because again, in 2008, it also happened, and we had a market crash, we could understand that. But that's not what happened. In July, there were 43,000 deliveries of contracts. And then in August, there were another 47,000 of contracts. So that's basically 15 million ounces of gold that's been delivered just in those months, those 3 months, which just blows everything that's been delivered in the past out of the water by far, by far. Now, amidst these deliveries, I happened to spot a pattern because starting mid-June, the amount of deliveries and open change, meaning the amount of contracts disappearing off the exchange, stopped lining up. The first time I noticed it, there were 7,340 contracts delivered, and the open interest only went down by about 6,800. And I thought, well, 7 isn't 6. What's going on here? So there was no information on this, obviously. So I just kept following the deliveries every so often. And in one of the early weeks, June, there were already, in 1 week, 3,488 contracts that were just not explained by the open interest. That there was a gap. And that's 344,000 ounces of gold. Just, the contracts were just apparently made. So I started calling them shadow contracts because, well, if you deliver a contract, you no longer need the contract, so the open interest goes down by 1. So if the open interest at the end of the day doesn't match up with the amount of deliveries, well, somebody must have made a new contract. And if they made a new contract open for delivery, they must have found a new bar. That's the only logical conclusion. So why, in the middle of a pandemic, in the middle of a supply crunch, in the middle of lockdown, shutdowns, mine shutdowns, and not even an escalating price, because this was happening way back in June, July, before the big rise in price anyway, just basic, why would anybody push more supply on the COMEX when there's a supply crunch? Unless the one thing everybody knows about the COMEX, that it's severely over leveraged and there's no freaking way they have all the gold that they say they have. Somebody pulled the trigger on that Mexican standoff. So somebody thought it's no longer beneficial to keep the current system going. We need to extract gold from the market. How are we going to do that? Well, they're not going to do it openly, because then you get immediate panic demand and it all ends in a day. So what I thought at the time was going on is that the bullion banks, mostly JP Morgan, because they are the precious metal market with their size in the market, which is like half of the gold market and 2/3 of the silver market. I thought, since they have all the data and they can just predict this out even more than I can, they must have pulled the trigger and they must have decided that the time to end the system is now, because it was always going to end. There was always going to be an end point to the road. You can't kick the can forever. But when should it end? Well, if the virus hadn't happened, they could have just kicked this can down the road the rest of the year and just extracted even more without the need for any shenanigans. But the virus and the now, by June, severely polarized upcoming elections are just the perfect trigger to say, yeah, no, we're not going to survive this. No, time to exit, time to leave. So using that logic, since there were no shadow contracts in silver, meaning every single day the open interest reduced was more or the same as the amount of deliveries. It can be more because contracts still roll over to the next month, even after the first day of delivery. There's ways around that. But the open interest just cannot go down by less than deliveries. And up until, I think, July, silver had always gone down less, as far as I had seen. I didn't notice the test runs in May until much later. Anyways, I designed a little experiment and I was like, well, if the COMEX is being drained by human manipulation, and this is not some sort of data glitch, then the same thing is going to start happening to silver. So I need to start making screenshots of that event before it starts happening. Now, I'll show you this because it's a few threads deep. But you can see here in the picture, and you can find this in the pinned tweet on my Twitter. All of this is public information. I give everything away. The start of June for the July contract, so this 29th and the 30th of June, the change in open interest went down by more than the deliveries, even though there were massive amounts of deliveries. Because on June 30th, there were 11,458 contracts delivered, which I have to grab a calculator for how much it really is. 11,458 times 5,000 ounces per contract is 57 million ounces in a day. But there were no shenanigans. However, you can see down the line from Thursday the 9th of July, suddenly the open interest doesn't line up because there were 37 deliveries, but 25 open interest change. So where did the extra 12 contracts come from? Well, those are the shadow contracts. And after that, they appeared a few more times, but in small numbers. After that, they started appearing in regular amounts, always in positive numbers. And then it started accelerating to the point where there were many shadow contracts. As you can see, Wednesday, this 22nd of July, there were 242 contracts delivered, and there was only a minus 25 open interest change. And that amounts to quite a bit of contracts, because 217 difference times 5,000 is 1 million ounces of silver that they apparently just found under the bed. Because they made the new contract, and as you can see, all these contracts ended up being delivered in that month. So the contracts that were made on that day were either delivered the next day or somewhere else in the month. And that's just, I can only conclude that they found the bar because it was delivered. So how in the heck, as you can see here at the bottom, throughout July of the July contract, the total amount of contracts that were added that didn't exist at the start of the month is nearly 1,200, which comes down to nearly 6 million ounces of additional silver that they found. And that was July, because they found another 2 million in August, and in September, which was the recent one, they actually found 14 million ounces of additional silver. Where in the fuck are they finding all these ounces? I know that there's not a supply crunch now, but that's the whole point. You don't wait for supply crunch to buy anticipating a supply crunch. Even though many people now are waiting for inflation before they protect themselves from inflation. So the main thing about this was that there was a predictable pattern in it. And the July thread shows that the best, because when you're dealing with human manipulation, there's always, even though they try to hide it, there's always a pattern in it, especially if you're time constricted. In this case, what you can clearly see in the overarching pattern is that at first there were no shadow contracts. So even though there were many deliveries, they knew people were going to look at many deliveries, so they weren't going to try any shenanigans then. They did try it with gold, but in this case, because focus was already on the deliveries, I think they skipped that. However, halfway down the month, when there were only 2,800 contracts left, nobody's going to look at the data that closely. Well, nobody except for me. So they introduced it once, plus 12. Well, the next day it's minus 29 again. It's okay. So people are going to think, oh, it's just a glitch. Plus 7, minus 7. Yeah, it's just a glitch. Minus 11, plus 12. It's just this fucking website. Oh, God, I wish they were competent. Well, at that point, you are effectively already trained to be used to a new situation. So then you can see, again, it starts happening, but it doesn't happen in big numbers. So is anybody reacting to this? Is there any problem? That's basically the manipulator looking, I have tried shenanigans. Is anybody noticing that these are shenanigans? No, I think we're good. No, okay, let's just hit it. And then you can see plus 217, plus 43, plus 79, plus 325. This day, Monday, July 27th, they don't even try anymore because they deliver 92 contracts and open interest goes up by 233. What the hell? So it's brazen, I'll tell you that. But again, that's what time constraints leads to. Anyway, what this entire overarching pattern tells me is that somebody is trying to get as much silver and gold as they can possibly find off the COMEX and having it delivered. Now, why that matters is because what you're looking at, deliveries, is basically gold that hasn't moved from their vaults. It doesn't have to. All they need to do is open up their books, or the computers in this day and age, change the account holders or the serial bar of the gold bar and just add it to another account. That's it. You don't need to move the metal. The metal is audited and is there, assumably. But in the books, they just change the title of the metal and that's it. You don't need to move it because the gold needs to be stored anyway. The silver contracts worth with 5,000 ounce or 1,000 ounce bars or something like that. 1,000 ounces is heavy. So those 11,458 contracts that were delivered, I think that the calculation was that's about 1,700 tons worth of silver. That's about 7 or 8 fully loaded Boeing 747s. So that's not easy to move. So they don't. On the same day as those contracts were delivered, JP Morgan switched 33 million ounces, not JP Morgan, but JP Morgan did the most of it, I think about 30. 30 million ounces went from eligible to registered category on the COMEX, just with the flick of a pen, basically. Just 30 million ounces moved. There you go. So that's how they're draining it. And once the COMEX declares force majeure, meaning they no longer have to deliver contracts, or they just cash settle everybody out. Cash settling everybody out is not a problem because there are many, many, many billions worth of dollars and there's not that many billions ounces of silver. So they'll be happy to cash settle everybody out because by the time that whole legal business comes to an end, we'll be down the road 2 months and silver will be worth so much more that they'll be able to afford to cash out with like a percentage of whatever silver they hoarded. So that's the end game here. That's why I think it's JP Morgan. It's most likely JP Morgan. When is it not JP Morgan? JP Morgan recently got $1 billion fine for spoofing the gold and silver markets. So of course it's JP Morgan. But once this all collapses and then this all comes down, JP Morgan is going to end up holding the title to the cereal bars. They're not going to have to deliver any of them because of force majeure. The price of silver goes through the roof, and they'll pay whatever fine you can give them, because that'll be like 100th or 1,000th of the money they made pulling this off. This is the biggest heist in history.
Is that what you think JP Morgan is getting at? They're stockpiling and hoarding silver, and they're going to want to sell it at a much, much higher price.
Oh, they're not even going to sell it. They're going to hold it. Like, again, we all know inflation's coming. If it's not going to come through QE, it's going to come through the digital dollar and the fact that everybody's going to have a fuck ton more money to spend in the future. Naturally, asset prices are going to go up. JP Morgan knows all this. There's a lot of very smart and ruthless people working at JP Morgan. So if I can figure this out, if you can figure this out, why can't they figure this out? Well, the answer is they did, and now they're going to basically own a lot of money in the future. I should clarify one thing. It's very important that people understand that. They're not doing anything illegal. The spoofing was illegal. But this, draining the COMEX, they are market makers. They are the bullion banks on the market. It is literally their job to basically match a bar with a contract and put it on the market. So they are effectively doing their job. But what is not their job is to make a contract for the current active delivery month in the futures market and immediately deliver that. That hasn't happened before. That's never going to happen again as soon as people figure out that's going on. This is purely a symptom of a invisible hand doing what it's doing. And it shows up in the numbers as the numbers don't line up. And that's all that's all the difference we're ever going to get. In fact, I'm pretty sure this is an oversight for them. If they knew they'd fucked up this way, they would have never done it. But at this point, it doesn't matter anymore because they have already won. So I think they just don't know I exist. But this is the fact that the deliveries and the change in open interest doesn't line up is simply a technical oversight. Because if you want to drain the COMEX, you have to go through the system of the COMEX, which means the bar needs to be matched up to a contract, which means it's going to show up in the data this way. So that's exactly what has happened. And nobody seems to have noticed it. Well, except for Little B.
Exactly. So it does seem like a perfect storm for silver. We have the manipulation, we have the small market that the big guys are playing with and messing around with, and then you have the industrial use and monetary demand rising. So I guess the question is, like, what would be your time frame for like a big run up in price, and over what amount of months? Do you see it in a year?
Gosh, well, I did make a video called Death of the COMEX in 2020. So what I expect is I'm still, as you asked me before that we went live, I'm still bullish on that. I still very much think it's going to happen because the pattern as it's continued over the months, like I said, it went down in August because, well, there was almost no open interest in August, but then it went so much up in September. I didn't even want to make screenshots for September originally because I didn't think it was going to matter because it wasn't that much contracts delivered, but it ended up mattering a lot. So I still think that the December 20th contract is going to kill the market because it's going to, well, it's the first contract wall that's going to be delivered after the elections, and it's going to come up for delivery on, I think, the 29th or 30th of November. So, well, 3 weeks into who has won, we haven't counted all the ballots yet. Mess. So I expect a lot of people to stand for delivery, but they don't have to deliver on the first day. They only mandatorily have to deliver on the very last day. And that's why there's never a shadow contract on the last day of delivery, because they can't make a contract for the next day because the contract entirely is going to disappear. That date for the December contract is going to be 29 December, 30th of December, depends on what day it falls, the weekend, you know the deal. But it's the new year. It's the New Year holiday. And there's always like I thought like the New Year holiday, it's like 10 days or something where even the repo market doesn't trade. In any case, you know how it is around the New Year's. Stuff basically shuts down for a week anyway. So if I were in charge and if I were ever going to do a banking holiday that needs a few extra days because we have to revalue the base of the monetary system, namely gold, I was going to do it over New Year's because it's just the perfect timing for it. And lately, we've been seeing more and more of the elite call for a great reset or something. Well, you still need to time that, and you can't do it on a business week. You can't do it at 12 on a Wednesday because the market's going to be dead by Thursday. So usually they would do it in a weekend. But since, well, that contract's going to end on December 30th, or around about there, why not do it over the New Year's? It's perfect. Everybody will be distracted. That's when I think silver is going to have its first move up. But there's actually going to be two moves. The first move is the revaluing. Basically, we're not going to look at how much money there is. That's not the point. The point is how much silver is there actually. No more multiple rehypothecations of bars. No more multiple loanings. No more leverage. How much bars are there really? And we're going to just, well, look for that. And that is going to increase the price overnight by decree, maybe 10x or something like that, easily. Or 5x, and that is just going to go up 5x the week later. It doesn't matter. So something like that's going to happen. And only after that event is it going to go up slowly but continually as currencies of the world depreciate further, while silver still needs to be mined. Even if it goes up 10x overnight, that doesn't mean that there are suddenly 10x more mines. New discoveries have to be made, new mines need to be built, new roads need to be built, new bridges need to be built. All of it costs real world time. So silver is just first going to go very high. Then everybody's going to get a reminder of why it is that high. Everybody's going to want to buy it. Demand then pushes it higher. And only after that are we really going to see hyperinflation because everybody gets more money to buy even more silver, so the price is going to go even higher. But that also goes for every other commodity. So the time frame on all of that is always in flux. I will straight up tell you live on air, I don't know the future. I've presented as much evidence as I could as to why my theory is correct. At least I've presented some evidence. Most people don't even come up with charts. But I don't know if it's going to happen for sure. What I do know, if it's not going to happen in December, it'll either happen in March, or it'll happen in June, or it'll happen sometime next year, because the situation is only going to get worse, and I'm not off by much. But that's on the great revaluing. The demand, the panic demand that comes after, that can take a month, 2 months, something like that, until it hits the first correction where it was basically overbought. Why is that going to happen? Because we are humans, we don't learn, and we always make the same stupid mistakes. So we're going to overbuy silver. It's going to correct down. People are going to sell it because they're going to panic. But we're not even halfway through next year then. And the digital dollar should be implemented by then. That's going to go really fast, much faster than people realize. And at that point, inflation's really going to take off. And then you're going to see silver go through the roof permanently. It's just a problem that at the same time, every other asset is also going to go through the roof. So relative to silver, you're not going to win that much if you buy in then. So if you want to let's go back to the way beginning question. If you want to get that 500x, you have to buy in before all three events. You can't buy in after the first event because you're not going to get that 500x. You can get 100x, sure, but that's not 500x. And if you buy in after the second event, right before inflation really gets off, well, then you're going to maybe 3 or 4, maybe 5x your money, because you're going to have to spend a lot of money to buy silver that is not going to go up that much further, relatively speaking.
And that's what we want to do. We want to get in early. So that's a really convincing bull case. I'm trying to think of some risks to the silver price going up. And one thing people like to talk about is why, if the U.S. government, in the 30s outlawed precious metals and made it illegal to own, Why wouldn't they do that again to kind of protect their currency?
That's very simple. I can answer that right away. The currency in the 30s was tied to gold, and it's currently not tied to gold. Basically speaking, if they in the 30s wanted to print currency, they had to procure more gold. Whether they stole it from an enemy or mined it out of the ground, that doesn't matter. As long as you're on the gold standard, and if you want to print more currency, then you have to have more gold backing that currency. Since that was not the case back in the 30s, they had to confiscate gold and make it illegal in order to raise the price all at once. So when they confiscated it and raised the price from $20 to $35, effectively they devalued the dollar by 75%. No, 70%, 75%, something like that. And that is the whole reason why they had to confiscate the dollar. Now, since 1971, the US hasn't been on the dollar standard anymore. So there's no active reason for them to confiscate gold right now because they can just print more dollars like they've been doing. And that's that. But there are other risks. I'll name two. Well, it's not really a risk, but I expect that when inflation starts happening and the prices really start taking off because of monetary reasons, governments of the world will, especially in mining heavy countries such as Canada especially, but also Australia and the US, to force local mining companies to sell to the government, much in the same way as Russia's been doing, where Russia doesn't export gold, but the central bank buys the gold off the mines. I think that's the most likely outcome for miners.
So what would that do to mining shares?
I think they'll just keep on raising because business is still business. And if the government asks too little money for the gold, the miners will sell it on the black market. They don't give a shit. Because, if you are in control of the money, you are in control of the world. And when gold is money, the miners are in control of the money. Why it is okay is because nobody controls all the mines. So nobody controls the world's gold supply because each country has its own mines. But for nations such as Canada, for instance, Canada doesn't have any gold reserves. Why? Nobody knows. But when the currency starts depreciating and the Canadian dollar needs to have some sort of solid backing again, and they have no gold to do that with, there's only one quick way for them to do it, is to force all the miners to sell to the government for the right amount of currency. So the currency will be tied to gold, and the gold will be sold to the government, and the miners will be paid in the new currency, and the currency will have value because the amount of gold that the government has is going up, and that is restoring confidence. So I don't expect any additional losses from that from the government. It's just something to keep in mind. I don't expect any mines nationalizations unless things get exceptionally dire in any one mining countries. But as far as I know, Argentina is a pretty good mining district, and they've had so many bankruptcies by now. So yep. I'm not that worried. I did promise you a second one. There is one great risk to the early investor who wants that 500x mark, and that is writing the price down. When do you sell? That's something I've seen a lot of people ask, but nobody really give a satisfying answer to. And the answer to that is you sell at the top. Well, not exactly the top. You sell at the top 25%, preferably. So the first rule of trading is very simple. To sell, you need to buy. If nobody's buying your shit is worthless. Simple as that. So even if you buy silver or rare earth companies now, and everything I say comes true, and you write it all the way up, time is still time, and it's going to go on forever. And humans are still humans. So they still overbuy and oversell. Silver's going to peak at some point. I don't know when. We're talking 2023 here, and of course, the further out you go, the more hazy it gets. But it's logic that at some point, silver's going to peak like everything peaks. And if you want that 500x, you need to sell at the peak, because if you write it down 25%, that's 375x. So that's not the 500. And the way I would do it, and the way I'm going to do it, is when I see signs that silver's overbought, and they're just as easy to spot as the overbought signs of the NASDAQ. If Barrick is trading at 200 PE, I'm going to sell Barrick, basically. So once that situation occurs, and I expect it to be close to the great deflation, or the hyperdeflation, as I said, then I'm going to sell at that last 10, 20% of hyperinflation. I'm going to trade my silver in for physical assets that generate cash. Now, it seems really weird to buy cash when it's hyperinflating, but again, I am looking at a slightly longer term here because, as I said before we started recording, the way to do it at the top is to, when you're near the top, you exchange your silver for a house or multiple houses even, because things can get pretty desperate, or a very good latest model car, or a new very high performance PC, which you can use to generate revenue with. Because once the deflation has happened, money is worth a lot again. That is what deflation is. Money becomes worth more. Now, hyperdeflation is basically the end of a hyperinflating currency, which is the point where you exchange $1 trillion for one new dollar, for instance, and the new dollar is backed by gold, so it's not going to hyperinflate as well. Well, before that happens, before that point, you want to exchange your worthless dollars for physical assets that you can then put a tenant in that's going to generate the new dollars for you. And then you're going to live off the passive income of the new dollars. So that's the way to really 500x your money, or even further, you can go up to 10,000x if you want to, if you time it just right on the right day of hyperinflation. Again, it's ballsy, but it's possible. You can really just sell your silver for maybe just a couple of kilos will buy a couple of houses, because the people who have those houses are so desperate to buy silver to protect whatever wealth they have left that they will just give you their house for it. And then you own a house, or then you own 4 houses or 5 houses. Well, I can't live in 5 houses and I have no desire to. So I'm just going to put a tenant in, or tenants in 4 houses. I'm going to live in the 5th one. And those tenants, I'm just going to say, look, pay whatever you want. I own the house wholesale. I have no debt. There's nothing that's going to happen to me. Adjustable debt is the worst thing in hyperinflation, because they're just going to adjust the mortgage interest rate up. Like you're going to get interest rate of 2,000, 3,000, 4,000% on your mortgage. The banks don't care. They have the same problem as everybody else. They want to get rid of the currency too. So they also need more income. But if you own everything wholesale, you don't need any income to pay off any debt, meaning nobody can steal your shit from you. So the moment where currency becomes worth a lot again, stuff that generates currency also becomes worth a lot again. And silver and gold do not generate currency. That is the big argument of Warren Buffett against it, and I understand his argument. I am not entirely on board with it, because purely the mining of the gold, the securing of the gold, the transport of the gold all creates jobs. And if it creates jobs, it has value. Otherwise, you might as well say, well, we're all going to die some point anyway, so what does it matter? But he is right in the fact that once the gold is mined and it's in a vault, it doesn't generate any dividend. It doesn't generate any value. It doesn't create a company. It's just going to sit there. It's a great store of value, but the opposite side of the coin of a store of value is that it's never going to go up. It's a perfect store of value is always going to be worth the same thing. It's always going to buy the same amount. So once the economy starts growing again, what you don't want to have is something that doesn't grow. So that's how you exit silver. At the top, you buy stuff that generates income. And when that income increases in value, either because the currency deflates or because the recovery is here and growth resumes, well, then you grow with that.
One other thing people talk about with gold is the reset and how the monetary base will be linked to gold. So, but then people also talk about how, well, why not the SDR? Why not a basket of currencies that's diversified? So it's on a relative basis, it's still good currency. Why would they go with gold as the standard and not like a basket of currencies like the SDR?
Because the SDR consists of the US dollar, the European Union's euro, the Japanese yen, the Chinese yuan, and the Bank of England's pound, all 5 of which are being printed like mad. So instead of a hyperinflating currency as a reserve currency, we would have a basket case of hyperinflating currencies. People do say that at some point they're willing to introduce gold as part of the basket, and then the SDRs would more or less be backed by gold. But I don't see that happening, because there's never been, nor will ever be, a global consensus on gold. Basically put, everybody wants gold. So I don't see that happening. I don't see it because everybody wants gold. To get it into the SDRs, everybody has to agree on gold, and that requires everybody to put aside greed, and I don't see that happening. So no. I think they will try, they will suggest it, and maybe they'll even develop it. But I think it'll never come that far. I think because I think that the SDRs are already obsolete and been replaced by the digital dollar and the digital euro and such. And they're going with that system instead. Because the non-digital stuff will hyperinflate, then the digital stuff will hyperinflate, and by then they need to tie the whole system back to gold, or it's never going to work.
Yeah, I think you've made a very strong bull case for precious metals, and if someone listening doesn't agree or can find some other hole to poke into it or try, then feel free to leave it in the comments. So you've alluded to the fact that at some point you're going to sell your silver and maybe even buy oil, right? Because right now it's dirt cheap. My only concern with oil is listen to the rhetoric in Washington. Eventually the Democrats are going to take over and the Green New Deal will be passed and they're just going to outlaw just about everything. Why would you favor oil in light of that?
One word, and it's not a word that anybody in Washington likes. Reality. Peak oil's happened, people. The easy to pump up stuff is gone. Shale, U.S. shale, requires $80 a barrel to be profitable. It's currently not $80 a barrel, so shale's going bankrupt quickly. Why do you think the Federal Reserve bailed out junk debt? It's because most of it is shale. Like I said, by the way, because I showed you the picture where I predicted the oil shock. I made another post below that predicting that they would bail out shale. Because it's a national security issue. America's self-sufficient in oil. China's the biggest importer of oil. So naturally, the customer dictates. So China will be dictating the oil market from now on. The politicians may not like it, but oil is so energy dense and so still relatively cheap to pump up that it's not replaceable. Even if you outlaw it for travel, that just gives us more oil to make plastics with. There's so many oil derivatives. You just look around your room right now. You're probably listening to this on headphones, which have plastics in them, which make it of oil, or you're looking at this on a monitor, which has plastics made of oil. Keyboard is plastic. The mouse is plastic. You're sitting on a chair that's probably got plastic in it somewhere, etc., etc., etc. There's no banning oil. There's just no banning oil. Besides, it's hilarious. And that's why I say politicians don't like reality. I saw the message that California banned gas cars by 2035, while their electricity net is having 5-hour blackouts on the hottest days of the year. What is he going to run these cars on? You can't destroy the grid and go to electric cars. It's either or. You have to improve the grid and go to electric cars, or you're going to stay with gas cars and you have a shitty grid. Well, they're going to have a shitty grid, so they're going to have gas cars. That's simply how it is. Or they're going to have diesel generators generating electricity at the charger points. That's also something. So, yeah, they might want to think that we're going to move to electric, and we will, but their time frame is completely off. Where are we going to get these mystery batteries for all these fucking vehicles? They have to be made. And that's the problem with these politicians. They've been living off freely printed money for so long, at least in the US, that they have lost all touch with reality. Like everything is handed to them. Everything's just given to them. So why would they ever care about stuff actually needing to be produced? They never needed anything to be produced. They just asked for it. I'm not sure if you saw the interview with Nancy Pelosi with Wolf Blitzer. Again, I am not picking sides. I am not political. I have even got it in my bio on Twitter that my alignment is chaotic neutral. I mean that. I am neutral. So when I say that if Wolf Blitzer gave even the tiniest bit of lip to Nancy Pelosi, and she straight up said, we feed them, we feed the people, the arrogance. The fucking arrogance. She is so out of touch with reality that they can legislate oil all they want. All they're going to legislate is the downfall of the economy, which they already have, by the way, because 75 years of government mismanagement and government overspending isn't going to be fixed in any one presidency. You can vote for Biden, you can vote for Trump, you can vote for anybody, and nobody's going to fix this. Even me, with all my knowledge and all my kindness and goodness and to morally correctness, even then, the most I can promise America, even if I had authoritative power over everybody, is a slow slide into the abyss. All right? Instead of an instant crash, you would get a slow slide into the abyss. That's the best I can do. That's the best anybody can do. You guys fucked up. You now have to pay the price. It's that simple. So I would like to see them ban oil because it's not possible. What's going to happen is there's going to be a global, well, not a global conflict, but there's going to be a major conflict because there's always a major conflict at some point, and that's going to drive up the price of oil. And after that conflict, after so much oil has been used up, people are going to realize, well, all the easy stuff is gone, all the low-hanging fruit is gone, half of the fracking stuff is also already gone, and there's not that much oil to go around anymore. That's when electrification is going to really speed the hell up because we've got no choice anymore. That's when nuclear is going to come back because we've got no choice anymore. Nuclear is already going to come back, by the way, but we can talk about that in a moment. Basically put, oil looks to be in a bad picture right now, but that's only because we're at the bottom. It's never going to be this cheap again. And I'm actually waiting for oil to have its final crash, which is going to happen, I think, in 2021, simply because there's a supply glut right now. There's many OPEC countries which have budgetary reasons to not obey production quotas, especially because nobody really ever really obeys them anyway. And then there's Russia. So I expect the supply glut to just continue onwards into 2021. But at some point, inflation will start happening. Oil is just another commodity, so it's also just going to go up. Only it might lag the rest. So when to rotate into oil is a very tricky situation that I'm not willing to call right now. Personally, I think it's between 2021 and 2023. But I do know that it's either going to be rare earths or silver, which winnings I rotate into oil, because, as I said, silver will be overbought because we are humans, and oil at that point will start rising either through conflict or through, well, simply the cure for low prices is low prices, as Rick Rule says. So at some point, the prices have been low for so long and investments have been lacking for so long that the price is going to go up anyway. And after that, after another 20 years of oil use, we're going to realize, the minimum price to produce a barrel of oil is now $30 in the country with the most oil. And everybody else is asking more. And even that price is not going to go down because it's a fossil fuel. Now, when I say peak oil and oil is going to run out, I don't mean it's going to run out in a day, or a week, or a month, or a year, or 10 years, or 100 years even. It's just that at some point, oil is going to become prohibitively expensive for certain applications. And that's already happening in the fact that most big auto manufacturers now are producing electric vehicles. Everybody will credit Tesla for popularizing the electric vehicle. No, that was going to happen anyway. Elon Musk might have pushed the world's development, the research of batteries a bit faster, but I'm also liable to say that I think smartphones did it. Like energy densities have mainly been improved due to the demand of smartphones and the demand of everybody using a smartphone to just be able to use it longer. So I think that the battery development would have happened anyway. But now that other major car manufacturers are making EVs, they're doing it now because now it's become profitable through both economies of scale, development, further increasing of power density and power packs, those sort of things. So, and the reason why they're developing EVs now is because they have to front run this. Car manufacturers aren't going to wait until the oil becomes prohibitively expensive for cars. We basically already had that moment when it reached $150 a barrel in 2008. So it already became really expensive at the pump, and there was already a lot of pushback against that. And peak oil's already passed, so the situation is only getting worse. Maybe the oil manufacturers won't have much of a problem. Their profits are just going to go through the roof. But the car manufacturers, as users of oil, need to switch now. And that's what they're doing. And because, well, I will say that maybe what Tesla's bigger contribution to electrification was than the cars is the charging networks, the Tesla superchargers and such. Eventually, Tesla will go bankrupt because they've been losing money since their inception and they'll never make it. But their assets will still be there. Somebody's going to buy up the charging network. And they have shown also that there's a market for it. So I also know of other charging providers who have jumped into that same market. So in that sense, they have helped the world. What's going to happen anyway? Oil's still going to run out. It's still fossil fuel. So, you know, it's inevitable.